it's been a very volatile market today. Some stocks moving to the low point of the day. Among large caps, you have Mahindra and Mahindra. Just pull out that stock. That one's making fresh lows of the day. So that's M&M's chart, 659 on that stock. If you're talking about mid caps, couple of the mid cap names that stand out. Century Textiles moved to the low point of the day. There's NMDC, which is moving slightly lower. So that's something to keep an eye on. Apollo Hospitals from the high point is slipping a bit. That's also inching lower. Reliance Capital, of course, the stock that we mentioned some time back, that's also moved to almost the low point of the day. On the other side, you have stocks like Amara Raja Batteries. It's quite interesting. I mean, just looking at the futures data, this is one stock where you're seeing quite a bit of build-up. Oh, and look at that move, especially in the last few minutes. That's Amara Raja. That's up quite a bit. In fact, trading in the green now. And there's Hexaware, which is made high of the day. We have, do we have our BTST calls? So we have Ashwini and Mitesh joining us for BTST calls. Ashwini, you go first. Thoughts on index and your stock calls?
I don't think there's much on the index, and we'll get a sustainable move only on the boundaries, which is 11,340 to about 11,540, 550. Otherwise, it's going to chop around. BTST IndusInd Bank is a buy with a stop of 1780, target of 1840. OBC is a buy with a stop of 110, target of 121. And RBL is a buy with a stop of 660, target of 685.
Okay, by the way, Anuj pointed out Hexaware. Do check out Firstsource once again as well. There's some tremendous amount of buying that seems to be coming into this stock. Big spike, days high on this one as well. So this Fortis, Firstsource, Amara Raja, Hexaware, these are some of the mid caps that are really on the move now. Mitesh, let's come to your calls. What are you working with now? Last half an hour?
So I also have a sell on Dabur or STBT with a stop at 419 for targets of 400, and M&M Finance is a BTST, keep a stop just below 420, look for 434, 435 as the target for tomorrow. Okay, fair enough.
Mitesh, your thoughts on ICICI Pru and how to approach that stock from here?
After a long time, I think the the charts are now showing a sustained rally should develop over here. But you've seen 355 time and again kind of hold out. So let it break about 355. I think once it does that, 385 should be your minimum target on the upside. I'm quite positive the structure in the last 4-5 sessions has changed dramatically to quite positive on the medium-term charts. But 355 needs to be tackled first.
Okay, all right. ICICI Pru, quite a mover for today's action. There's some movement on Titan, by the way, if you're talking about some of the large cap stocks on the move. Titan's recovering from the lows of the day. Let's just get the intraday up for you. So that's the one stock on the move. However, yeah, almost in positive territory right now. That's Titan for you. Let's get you some fundamental viewpoints as well. Actually, slightly longer term technical calls. Here's market opinion that is coming in from Gautam Shah of JM Financial. He, of course, tracks technicals. And he still thinks that longer term targets do look optimistic on the Nifty. He's also sharing a couple of sectoral calls. Take a look.
You had that very challenging period from November last year to February this year, wherein the Nifty was in that band. And in that period, you had too much confusion, too much ambiguity as to which way the market is going to break out. And if you actually look at it, the markets passed the acid test because I think there were too many factors against equities at that point of time. If you look at the chart setup, that entire 4-month long period has taken the, sort of a technical formation on the charts from which a breakout took place above 11,100. And this opens up a near-term target of life highs of about 11,750. Which I see in the next few weeks. And if I really look at the bigger picture, the medium-term charts, and the way some of the technical studies are positioned on the Elliott wave front, on some of the other proprietary indicators that we follow, we have a working target of 12,222, and we expect this target to come by in the next few months. So this is still a time to buy. There is still a lot of money to be made. The market has created a strong base around the 11,000, 11,100 mark. Until that is violated, I think I am tempted to be a buyer on every small dip that takes place.
Now what? To chase this market or to wait for a significant dip? And I was talking to one investor who said the biggest risk in this market right now is to wait for a correction.
I think I totally second that. I think there was, as I keep referring, that period of 4 months, you got an opportunity to buy into the market so many times, and people just refused to do that. And now when such a clean move has happened, and with the markets having climbed just about every wall of worry, I think it does not make sense to really wait for that correction. And when that correction happens, you always then get the indication that it's going to be deeper and deeper. I think the stubbornness of the bears is one reason why this market is not seeing a deeper correction, and I think this can carry on for many weeks and many months. Also, the election aspect is keeping most people on the sidelines, thinking that if at all there is some major drop or major volatility, they should not be participating. I don't think that's the right way to look at it, because even if you look at the election event, at least the charts are suggesting that a lot of it is already getting discounted into the price, and I just feel that it's going to get better and better as more and more people try to join into this rally at every level.
What about autos? I mean, I remember in the heydays, you were the most bullish on the auto space. Of course, the entire sector is going through a big, cyclical slowdown right now. At any point, does it look like a buy, or would you avoid it entirely?
Well, I think I would avoid it. I think it had a great last 2.5 years, and it's just going through that normal process of retracement. This is probably one of the only sectoral indices in the market right now which is not making a series of higher tops and higher bottoms. And I don't want to, buy into sectors wherein it would be a little challenging to be on the long side. I think there are much better names in the markets which are setting up really, really well. If you look at the capital goods space, while it has been in a range for almost 6 months, I think it is on the verge of a major breakout, and if that were to happen, you could see a 20% run for the capital goods index. People don't understand that 2013 to 2018, you had the mid-cap index go up 3.5 times, without any major correction. And what we saw in the last 6 months was a retracement of that entire, 5-year rally that has taken place. And now with the mid-cap index having formed a bottom around 16,000, and at the doors of that major resistance of 18,000, if that were to get taken out, you could see the next leg of the rally led by the mid-caps. And, you could see the mid-cap index to as high as 20,000, 20,500. So I think the next 6-8 months might just be a mid-cap rally, and one should really focus on that.
Mid-cap rally. Can you parse that a bit? That's 100-150 stocks. What should the investor train his eye on?
Well, I think there are new themes that are coming up, Lata, and that's quite interesting. If you look at the cement space, I think cement is seeing renewed strength on the charts. And what I get to hear from friends who look at things fundamentally as well, there is a lot of positivity that is coming through. So cement, I think, could be one of the dark horses for the next 6 to 12 months. Fertilizer, I think, looks very interesting to us. I think a lot of stocks in the fertilizer space did not do so badly when the mid-cap carnage happened in the, fourth quarter of last year, and now many of the fertilizer stocks I think are setting up for large rallies of 40 to 50%.